All right, let's talk about making your money work for you in 2026. If you're wondering where to put your cash to see some real growth, you've come to the right place. We're about to break down some of the smartest strategies out there. Ready? Let's get into it.
I mean, this is the big question, right? We all want our money to grow, but the how, that's where it gets tricky. There's so much noise out there, so let's just cut straight to what actually works.
So what we're gonna do is look at some really smart choices for this year. And I promise, no fluff, no crazy get-rich overnight stuff. This is all about smart, steady strategies to make your money work harder for you. And it all starts with building a solid foundation.
Okay, so first things first. Before you do anything else, you've got to have a solid base. And that brings us to our first strategy, which is all about safety and steady growth, the high-yield savings account. Seriously, think of this as the bedrock for everything else you're going to build.
So what even is a high-yield savings account? It's actually super simple. It's just a savings account that pays you way more interest than the one you probably have at your big traditional bank. We're not talking about a tiny bit more. We're talking rates that can be 10, 20, sometimes even 30 times higher. It's a huge difference.
And when you see it side by side, the difference is just wow. A regular savings account, it's like a turtle. It's slow, it's barely moving. Your money in there is probably losing value to inflation, honestly. But a high-yield account, that's the rocket ship. It gives your savings some actual momentum, some real growth, so you're not just treading water.
So what's the bottom line here? What are the big perks? Well, first off, it's safe. We're talking FDIC insured, so your money's protected. Second, it's liquid. That just means you can get your cash out whenever you need it, no problem. And the best part? Your money is literally growing while you sleep. You don't have to do a thing. Okay, so our foundation is solid. Now let's build on top of it. Let's talk about a way to actually get paid from your investments. This is where dividend stocks come into play.
I love this way of putting it. It really is like getting a paycheck from your investments. See, with most stocks, you're just waiting for the price to go up. But with dividend stocks, the company actually pays you a piece of its profits, usually every few months. It's a real, tangible return.
And how it works is super straightforward. Step 1, you buy stock in a company, making you a part owner. Step 2, the company makes money, turns a profit. And step 3, they decide to share some of that profit with their owners. That's you. And that cash lands right in your account. Pretty cool, right?
All right, moving on. Let's talk about the golden rule of investing. Don't put all your eggs in one basket. And the best way to do that brings us to our next strategy, diversified funds.
This analogy is perfect. Trying to pick one winning stock is like betting on a single horse in a race. Maybe you'll win big, but it's risky. Investing in a diversified fund, that's like you're betting on the whole team of horses. You're spreading out your bet, which massively increases your odds of coming out ahead.
And if you look inside one of these funds, this is what you'll see. It's not just one thing. Your money is spread out across a whole bunch of different stocks, maybe some bonds to keep things stable, and even other bundles of investments called ETFs. It's this mix that really protects you if one single company or sector has a bad day.
Okay, but what about the high growth stuff? For all of you looking for that potential home run, I've got a bonus tip. Now a heads up, this one comes with a bit more risk, but the potential rewards could be a lot bigger.
So where's the puck headed in 2026? A lot of smart people are looking at these future-focused sectors. We're talking about things like AI and all the tech that powers it. These areas are just exploding with growth. Yeah, they're more volatile, but getting in now could be like getting in on the ground floor of the next big thing.
Okay, so we've covered a lot here, right? From the super safe and steady stuff to the high growth, high risk plays. So what's the big idea? What's the one thing you should really take away from all this? It really boils down to one simple, powerful concept.
And here it is. Stop letting your cash just sit there doing nothing. Seriously, the biggest mistake is having it sit idle in a low-interest account where inflation is just eating it away. You've got to put it to work. You have to let the magic of compound growth take over. That's when your money starts making money, which then makes more money. It's like a snowball rolling downhill. And look, this says it all. You don't need to be a millionaire to start. This whole process can turn a small amount of money into something so much bigger over time. It's not about how much you start with. It's about starting now and just being consistent. Let time do the heavy lifting for you. So let's end on this. Your 2026 starts today, right now. Whether your first step is opening one of those high-yield savings accounts we talked about, or maybe starting to look into a diversified fund, the power is completely in your hands. So the real question is, what's your first move going to be?